the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. Ed, on assignment today, this is Bloomberg Technology. Netflix falls after missing subscriber growth estimates, but points to its password-sharing crackdown as a saving grace. Netflix, which apparently is pretty hopeful about the second half of 2023, when, of course, it starts to really crack down on password sharing, because Q1, a bit of a dismal start, the subscriber growth in particular disappointed. Let's bring in Parrot Analytics industry strategist Brandon Katz for more on this, and talk to us about the hope, the silver lining around cracking down on, what is it, 100 million people they think share passwords with Netflix? Is that really going to be some sort of, well, holy grail after a first quarter miss?
Holy grail, maybe not, but a supplementary source of additional revenue moving forward, probably. Now, you have to remember, every time Netflix has rolled out a price hike, it always results in temporary churn before stabilization. This really isn't so different, and while right now you're seeing churn rates go high in the regions that they're rolling it out, it is widely expected to stabilize moving forward, even when it comes to the UK market, which is their most mature market and where they have the highest ARPU. So there's probably some short-term pain for Netflix, but they wouldn't be rolling this out if they didn't believe in the long-term upside, particularly as the whole industry hyper-focuses on margins.
Oh, looking at margins with Tesla, looking at margins with Netflix, looking at the content being king. It was interesting that, well, adding only 1.75 million customers in the first quarter, less than had been hoped. Is that because of their content slate? And you in particular focusing on not just what the content is more broadly, but what Netflix makes versus what it licenses?
Yeah, it's a complicated question. We saw Netflix hit yet another record low in terms of global audience demand for its originals. And that happens because the streaming market is as crowded as a Best Buy on Black Friday, and that's not going to change anytime soon. But one saving grace is the fact that companies are reopening the licensing market after years of in-house consolidation. So Netflix will probably be able to benefit by once again acquiring titles from competitors that will help increase engagement, retention, and acquisition. So they still have to strike that balance. They still have a strong content slate coming out in the second half of the year, but it's really, really important that they start generating some momentum soon.
What about the people that they license the content from? You highlight Sony in particular. When they know that Netflix is out there pushing for advertising spots that are really quite expensive, how much can they negotiate for the price point of these sorts of content deals?
If someone like a Sony, the premier arms dealer of content in Hollywood, has immense leverage in these conversations, Netflix is already paying them $1 billion over 4 years for their pay-one film deal. That can continue to skyrocket in terms of other case-by-case licensing agreements. It's going to be really, really important because we obviously know Netflix wants to stabilize and kind of solidify its content budget around $17 billion for the next few years. But they are going to be hard-pressed to find better deals. Everyone knows they need the content, and now is a rich, rich time to be selling. So despite the kind of crackdown on programming overall, they're in a tough position, but also an advantageous one at the same time.
And I want to go to what was perhaps a bit of a debacle over the weekend for Netflix when it came to stress testing its live offering. They'd done it before once with Chris Rock, and then Love is Blind happened. You were meant to be tuning in live to be able to give your own questions if you're an addict to this particular reality show, and it had a whole load of hitches. How important is that, Brandon, to the future of the profits of Netflix?
I had my glass of wine ready. I was excited for the live event, and unfortunately, as you mentioned, it did disappoint. Now, Netflix really is being seen as test casing with Chris Rock, with Love is Blind, their ability to move into live sports, which is really the last vestige of hope that linear TV has. And as we've seen, live sports continue to migrate more and more towards digital platforms. So the fact that they had issues here is not going to instill confidence in any smaller leagues that they might be interested in investing in and apparently stealing the rights. And again, live events is another revenue generating source that's going to bring engagement and a lot of chatter to the platform. So if they want to continue to expand there, they have to make sure that the tech is up to snuff.
Let's talk leadership lastly, Brandon, because all of this comes under what has been a very well, compared to many other tech or indeed content tech companies, a pretty slick transfer of power that seems to be going on with Netflix. What do you make of it under the new leadership? And same old problems, though.
Listen, there's always going to be snafus here and there, but I think overall you're seeing a pretty seamless transition. You're seeing issues that we've discussed that are important, but not insurmountable. I would never bet against Netflix at this stage, given the way they've been able to innovate and adapt and continue expanding their product. So I think when we're talking about leadership, them hyper-focusing on the ad tier long-term is a great call. That's what investors want to hear. That's what's going to be a huge growth engine, particularly for price-conscious consumers in a very uncertain economic reality. So I think right now you're seeing Reed Hastings' footprints are still all over Netflix, but the new leadership in Greg Peters and Ted Sarandos, who's obviously been in that position for quite some time, is going to probably do just fine, all things considered.
Parrot Analytics industry strategist Brandon Katz, great to have your energy on today. We thank you.